Hello viewers, welcome to my channel. I am Hasham Ali Khan. Last two videos I have completed the theoretical framework of accounting, chapter number 1 for CA Foundation. Now this is the last video on chapter number 1. In this video I am going to explain you the problems. That means a statement will be given and the student is asked to give whether it is true or false. And apart from that, some MCQs are also there. So before going to explain those questions, take the screenshot of the points which I have written on the board. Now, in examination, you may be asked the theory, short question, one statement will be given and you are asked to give the answer whether it is true or false. So briefly, I am giving the explanation of each one apart from saying the answer. First, there is no difference between bookkeeping and accounting. Both are same. Now tell me whether this statement is true or false. It is false. It is completely false. See, bookkeeping is concerned only with recording the transaction in the books of accounts. Whereas accounting is a very wide concept which includes bookkeeping and also analyzing, interpreting and communicating the information to the users of accounts. So we can say bookkeeping is only a part of accounting. The first step of accounting is bookkeeping. That's it. So the statement is false. Second, management accounting covers the preparation and interpretation of financial statements and communication to user of accounts. It is false. See, management accounting is concerned with supplying the information to the management, whereas financial accounting is concerned with preparation of all the reports, all the records and giving to the final users. So here it is saying management accounting covers the preparation. It is wrong. Management accounting is only for internal purpose for the management. Next, financial accounting is concerned with internal reporting to managers of business unit. Again, it is false. See here, financial accounting is concerned with preparing the reports, financial statement for outside users. Whereas management accounting is concerned with internal reporting. The management accounting is concerned with internal reporting to managers. So the given statement is false. Next, customers of a business should not be considered as user of accounts prepared by the business. They are not interested to know performance of the business. It is false. See here, customers are also interested in the accounts. It is not necessary that final consumer will be the people who consume the goods. There are many consumers who uses for their production. For example, XYZ company supplies the goods to ABC company. So ABC company is the customer for XYZ company, right? Now the ABC company is interested in the financial statement stability of XYZ company, because if there is no stability, no profitability of XYZ company, then definitely the functioning of ABC company will also get affected. So customers are also interested in the financial statements. Next comes summarizing is the basic function of accounting. All transactions of a financial character evidenced by some documents, salary slip, etc. are recorded in the books of account. It is not summarizing. It is called recording. Recording is the basic function of accounting. Summarizing is not the basic function. So here again the statement is false. Summarizing means simply classifying, finding out the totals of the accounts and preparing the financial statements. Preparation of financial statements is summarizing. That is not the basic. Basic is recording. That's it. Balance sheet shows the position of the business on the day of its preparation and not on a future day. It's true. Balance sheet is a statement of financial position which is prepared as on a particular date on which it is prepared. It is not prepared for a future date. So this is true. Next comes objectives of bookkeeping are complete recording of transaction and ascertainment of financial effect on the business. Yes, of course. The objective of the bookkeeping is complete recording of transaction and also the effect on the business units. That is true. Next comes MCQs. So far I have explained you about true or false. Now the remaining questions are multiple choice questions. 3 answers will be given, out of which 1 answer is correct. You have to select that correct answer. Which of the following is not a subfield of accounting? There are different subfields of accounting. The subfields of accounting are financial accounting, management accounting, cost accounting, human resource accounting, social responsibility accounting. These are the subfields of accounting. So here management accounting is a subfield of accounting, cost accounting is a subfield of accounting, but bookkeeping is not a subfield of accounting. Bookkeeping is the first step in accounting. So the answer is C. Bookkeeping is not a subfield of accounting. Next, purposes of an accounting system include all the following except. What are the purposes of accounting? 3 purposes are given, 2 are correct, 1 is incorrect. Which is the incorrect? Interpret and record the effect of business transaction. Yes, this is the objective of accounting. Objective of accounting is to interpret and record the effect on business. Classify the effect of transaction to facilitate the preparation of reports. Yes, that is also one of the objective of accounting. Classifying the accounts. Dictate the specific type of business enterprise transaction that the enterprise may engage in. It is not the objective. It is not the objective of the accounting to dictate the business regarding what type of activities they should conduct. It is not the objective. So C answer. Next comes third question. Bookkeeping is mainly concerned with, what is the main activity of bookkeeping? Recording of financial data. Exactly correct. Bookkeeping is mainly concerned with recording the financial data. No need to see B and C. Designing the system in recording, classifying, this is not made the bookkeeping, or interpreting the data, this is not bookkeeping. Recording of financial data, that is bookkeeping. Next, fourth, all of the following are functions of accounting except this decision making, that is one of the function of accounting. Ledger posting, this is not the function of accounting. Ledger posting is a part of bookkeeping. It is not the subfield. It is not the function. Forecasting, yes, it is a function of accounting. So here, which of the following are functions of accounting except ledger posting is not a function. Now fifth question. Fifth question says financial statements are part of accounting, bookkeeping or management accounting. Financial statements are prepared by accounting. So correct answer is accounting. Right? Next, financial position of the business is ascertained on the basis of. How we can find out the financial position of the business? By preparing a balance sheet. So correct answer is balance sheet. It is not records prepared under bookkeeping or trial balance. The financial position can be ascertained by balance sheet. User of accounting information include. Who are the user of financial information? Creditor or supplier, lender or customer, both A and B. Yes. Creditors are the users, supplier users, lender users, customers users. That means all these are the users of financial accounting. The correct answer is C. Right? Next one. Financial statement do not consider what? Assets expressed in monetary terms, it will consider. Assets which are expressed in monetary terms will be considered in the financial statement. Liabilities expressed in monetary terms, yes. Any asset or liability considered in monetary terms, measured in monetary terms, will be recorded in financial statement. Last, assets and liability expressed in non-monetary terms, no. Non-monetary items will not find any place in financial statements. So C. These are not considered. Non-monetary items are not considered. Ninth, On 1st Jan, Sohan paid rent of 5,000. This can be classified as Sohan is the owner of the business. He has paid the rent. Paying the rent is a transaction. Paying the rent is a transaction. So B answer is correct. It is not an event. It is not an event and transaction. It is only a transaction. Paying the rent, paying the salary, purchasing the goods, selling the goods. Next, on March 31st, 2022, after sale of goods worth 2,000, he is left with closing inventory of 10,000. That means after selling the goods, he is having some inventory, that is stock. He is having some closing stock. That closing stock is an event, not a transaction. Transaction means exchange. Here, it is not an exchange. It is the goods left unsold. The unsold good left or inventory is an event. Now, 11th. Which of the following is not a business transaction? Bought a machine 10,000 for business? Yes, it's a business transaction. Paid towards salary to employees 5,000? Yes, paying the salary is a transaction. Paid son's fees from her personal bank account 8,000. The owner has paid the son's fees from her own personal account. It is not a business transaction. It is a transaction of personal in nature, not a business transaction. Last and final question, 12th. Which qualitative characteristic of accounting information is reflected when accounting information is clearly presented? If accounting information is clearly presented, what is a qualitative characteristic? It is called understandability. If it is completely clearly presented, it will be easier to understand. So qualitative characteristic is understandability. That's all. So in this video, I have explained you about the questions true or false and MCQs. And this is the end of chapter number 1, theoretical framework of accounting for CA Foundation. Inshallah, in the next video, I'll start the chapter number 2. So if you're satisfied, give a like to the video, share my channel among your friends, among your groups, so that more students can watch the video. Give your comments. Subscribe my channel if you have not yet subscribed, and by the super thanks which is given below my video. Inshallah, we'll continue the next chapter in the next video.